In today's topic, we're going to cover in deep detail what a cash out refinance is. What exactly do you need, and how does that differ from a HELOC? Because I've gotten that question a lot from some of the students at Elite and some of my friends. So without further ado, let's just dive in. So for recaps, what exactly is a cash out refinance? So we have a cash out refinance and we have a HELOC. So let's start out with the cash out refinance because we covered that in our prior video. So a cash out refinance, it's a commercial loan that you get from any lender, most likely a bank, in exchange for the equity of your property. That property can be your home where you reside, it can be any rental property that you have, and the requirements are usually higher. So you will need at least a 25% equity in it, and you can do it in any type of property. And once you get the money, you have all the money, right? So it's given to you in a lump sum. So you got that, and now a HELOC, it's somewhat similar, but not really. So you can only do a HELOC in your residential home. You have to live there in order to qualify for a HELOC because it stands for Home Equity Line of Credit, right? So it has to be in a home. The requirements are a little bit more flexible compared to a cash out refinance. I believe you need 20%. You need to have 20% equity in there, and it's not given to you in a lump sum. So as the name says, it's a line of credit. So it kind of works like a credit card. And by that I mean you have, let's say, I don't know, I'm just throwing a number out there, 100,000. So the bank was willing to give you 100,000 worth of a HELOC. You have 0 to 100K to spend. You don't always have to spend 100K. So you have this money available to you, but you can choose to spend, let's say, 20,000. And the interest rate on the HELOC is going to be charged only on the $10,000 that you took out. Let's say you pay down to 5, but then in a few years you take out another 10,000, putting you at a $15,000 loan. Again, you'll only pay interest on what you have used to date, and not the rest. So there's actually a book out there. I'm gonna do another video to give you a review on how a couple pay down their house using a HELOC. They pay down their mortgage in less than 5 years. It was actually a very interesting book. I haven't personally tested it because I currently rent. Prices in New York City are actually quite expensive, so I chose to take that money and increase my rental portfolio instead, rather than paying a lot of money on a non-performing asset, like Robert Kiyosaki will say. And so that's in a nutshell. Oh, and rates. So based on the research that I did, you actually have to pay higher fees on a HELOC as opposed to cash out refinance. I'm going to say I don't necessarily have to agree with that because it all depends on the relationship that you have with the bank. So if the mortgage broker and you have a great rapport, you guys hit it off, chances are you can get a discount, because I managed to, talk them into giving me a discount, and it has worked out fine. So I wouldn't necessarily just let that get in the way. So that's just a tip for you to know. So what exactly you need to make a cash out refinance happen? That's something that you definitely have to keep in mind. Some of you have heard from the Elite training about having a power team. So a power team is actually very important in this case because you're going to have to rely a lot on them. So in this particular scenario for a cash out refinance, you're going to need a mortgage broker. You're going to need a property manager. You're going to need an appraiser. And of course, it's not part of a power team, but it's definitely something really necessary. Great credit. And you're also going to need credit cards or funds. So the broker, you're going to meet, you're going to build out a report, and you're going to tell them what you're trying to do. You're going to say, hey, I have a 17-unit complex that I'm trying to purchase, and what is your rate for a cash out refinance, because I'm planning to get that equity as part of a down payment for this engagement right here. So yada yada, you have the conversation, you're gonna build a rapport, and you're gonna have to agree to fill up some forms. And depending on the rate that you negotiate, you either can choose to lock it or you can just simply go to another bank. Keep in mind that if one bank turns you down or if one bank gives you a high rate, that's not necessarily set in stone. You can actually go to another bank and build that relationship with another broker and see how much they're willing to offer you. So always do your research, always see what's out there so you can actually compare. If you get refused for a loan, don't take it personal. Chances are it's not entirely on you. Some banks, they have quotas that they need to make. Sometimes they exceed that quota by the time you get there. But if you return, let's say, at the beginning of the following month, chances are you might be able to qualify. Who knows? All I'm trying to say is each bank has different requirements. Some banks are more flexible in terms of the credit score. Maybe they can go over one loan or two, while others have more strict guidelines. So again, nothing gets you. Then you're going to need a property manager because chances are you are going to be working or you're going to be spending time with your loved ones or you're just going to be somewhere making more money elsewhere, right? And so you're going to need a property manager or somebody that you can trust that's going to let the appraiser go into the property and determine the value of your property. Now, these three are actually somewhat tied together. The appraisal for a cash out refinance is going to be at your own cost. So if you're like me, who is highly liquid because I invested all of my money, I leverage credit cards a lot. So the story with my 17 is that some appraisers cost, I think, 810, and then some, because they were single families, cost somewhere around in the 700. So when you multiply this by 17, which is the number of units I was trying to make, that number was actually quite high. I wasn't willing to give up the cash because I needed that for the down payment of the deals that I was about to close. So what I did, I just simply used the credit cards. I swapped the credit cards. I could go ahead. You have the appraisers taken care of. And that's it. And depending on the state, you don't need an attorney. I'm going to put it with a question mark because that's a maybe. Depending on the state that you are, you will need an attorney because even though it's a cash out refinance and it doesn't sound like a mortgage, this is kind of, in fact, a mortgage because you're using a property as a collateral. And I like cash out refinance because they offer a little bit more flexibility for those who don't own their own house, but they do have some investments elsewhere for rentals, and you want to actually leverage some of that property. And it's a great tool for you to expand your portfolio even further. You don't only use that to purchase another property, but you can actually use this money to flip a house, to develop land, or maybe to buy some piece of equipment for a house that has been sitting for a long time and you feel the need to upgrade it because maybe you want to take a cash out refinance on that other house. And by you forcing the value up by doing a nice kitchen, a nice bathroom, it's gonna help you take the full advantage of this vehicle. So as a recap, you have all of this information right here. And now you know you're going to have to go out there and talk to a couple of mortgage brokers and build some relationships. Chances are there's a few of them around the block from where you live. And if you don't know where to start, then again, use the website that I shared with you before, scotsmansguide.com. I'm going to include the link down below, so you're going to go ahead and use them. I'm also including the links for the credit cards again. For those who didn't get a chance to watch the other video, I want to make it as convenient as possible for you. So the links are all down below. Feel free to take a look at them. And I'm also going to make a reference to another video where I talk about how to use credit cards and use that money to invest in your real estate portfolio. And without further ado, that's all I have for you today. Hit the subscribe button if you like this content. Please share the love. If you have a friend or a family member or someone that you care about who thinks is going to really benefit from this information, feel free to forward the video to them, and hopefully they'll enjoy the content and subscribe, and that way it will be a great incentive for me to go ahead and create more content. So far it has been a great experience. I've gotten a lot of valuable feedback, great feedback from you guys, so I can't look forward to more, and so I'm definitely looking forward to more. And without further ado, I'll see you guys next time. Bye.